So, on today's video, I want to break down with you guys why and how important it is to stick to your price action every time you're looking for setups or when you are about to execute on that setup that you were looking for. Right. So today's video will never be an educational, will never be like financial advice. But all I want to make you guys understand is that how or why the power of price action is important in the Forex markets. Do you guys get that? But before we start the video, make sure you smash the like button, you subscribe to the channel, you share the video, you leave a comment, you click that link to sign up with the broker that I trade with and highly recommend. Or if you want to be part of our COT Academy team, you guys know that we're having 3 exclusive services. You can choose which do you prefer and which do you want at COT Academy to assist you with, and let us do the rest from there. Now, without further ado, let me break down how you can capitalize every time you see such possible directions, or why you have to stick to price action every time you are about to execute or looking for possible setups, right? So today, I'll be using USD CAD, right? Because this trade was based on USD CAD. You guys know it, that all that we share, it's mainly based on experience. It's experience based. I will never tell you guys about something that I've never tried out, something that I've never tried out, something I'm not doing, or something I'm not using. If I'd be doing something like that, I'm not only fooling you guys, but I'm fooling myself. Never doing it for the views, never doing it for the likes or the subscription number, but to mainly add value into your trading journey. Do you guys get that? So, looking at this trade, I repeat, on USD CAD, or looking at this possible move on USD CAD, you can clearly see how this trade was took and why. Now I'm about to break down why this trade was took and how you can also capitalize every time you see such setups or such market price action before you are willing to execute, right? So let's start off by removing all our drawings, right? So when we woke up on Monday, right, we understood that obviously based on our weekly trading outlook, you can also watch that those videos, that playlist, so we can understand what we anticipate for the coming week every Sunday and every Saturday. Right. So we now understood based on our weekly trading outlook that okay, where price is closed, we're having some type of correction, right? Based on what based on this impulsive bear move that we had, and based on this sideways move that price is giving us, all that we now looked for, all that we anticipated, was very simple. One, if price will continue moving to the downside, which is most likely to happen, then we'll anticipate or understand that our United States dollar, that the USD as weak, right? Meaning when price is weak, when the USD is weak, when USD CAD, price tends to be bearish, right? And we'll understand that once it moves to the upside, which was unlikely to happen, that we'll understand that the Canadian dollar, the CAD, is weak. So it's likely to do it to move to the upside. Do you guys get that? So when you now understand this approach, which is made like so powerful and so effective from the 80s up and until now, right? You will now understand that okay, every time something like this happens, USD CAD might have some strength. Every time something like this happens, the United States dollar might have some strength, right? But it's mainly based on what? Your price action before you can look into your strength and your weaknesses within currency pairs or currency countries, right? So we now understood that okay, from price having this sideways movement, from this impulsive push to the downside, we now are having two anticipations. One, which is likely to happen, we'll look forward for continuation to the downside by price breaking below our range or our sideways movement or our intraday correction. Two, we'll wait forward for price to break above, anticipating that the range that we're having, price was just looking for confirmation into what might happen, right? And look for price moving to the upside once price had that break above. But what's likely to happen is once price gives us a break below of the racing zone, then we're likely positive to do it to continue moving to the downside. Do you guys get that? So once you see that, okay, now price gave us what, a break to the downside 1400 p.m., which is like an hour before our New York open, right, in Southern Africa, right? 1400 p.m. price gives us a break below. So once price had this break below, now we're using candlesticks because now we understand our strength and weakness. We understand how price action is looking. Now we're using our candlesticks for our anticipations or confirmations into what my price do from there, right? So we have this break below candlestick, the candlestick that violated our range, our sideways movement, or our intraday correction, right? So once price gave us this break below, we now understand that if we'll be willing to take a trade because prices gave us a confirmation of which was likely to happen, then let's look forward for the coming candlestick to trade below our candlestick that violated our range correction or that intraday move, right? And once you have it, you can clearly see that the candlestick came and opened bullish. So from the bullish open and candle flip, that's when we did what? That's when we put our money to work. So putting our money to work with a what? With a clean 200 pip target, with a clean 200 pip stop above or and between our range, and with a what? With a clean 27 pip TP target. Looking for the clean one-to-one, looking for a clean one-to-one, looking for the impulsive and rate move to the downside, not looking for crazy pips, not looking for crazy risk reward or ratios, but simply making sure that if it happens that price shows us something like this and we're willing to anticipate or to risk it, then let's look for what we might be looking for and be out. Do you guys get that? Because now I understand many traders might be like, but bro, you only risk 20 perps to make 27 perps. If you understand the power of your risk reward, you will understand the power of what I did, right? We risk two. Let me just make an example. We're risking 200. So we're risking 200 just so we can make 270. Isn't it like an, isn't it a gain? Or isn't it like, is it a gain or a loss? That's what I need you guys to comment down below on my comment section. But I want you guys to understand that if price gives us an impulsive move to the downside and we get that correction, what's likely to happen is that price will continue moving to the downside with a break below. But you simply have to wait for your strength and your weaknesses, wait for price action to confirm, wait for candlesticks to confirm, and wait for your trading sessions to also confirm. You guys get that. But without further ado, I hope you stay blessed by the best, and I'm gonna catch you guys on the next one.